If you're finding it difficult to navigate this market recently, you are absolutely not alone. Yesterday, I made a video talking about how, oh my gosh, the market's, completely flipped to the upside and fooled everybody. And then they were down by the end of the day. And today, I'm cautiously pointing out that the stock market is up again today. But will this be one big fade the day again? Let's jump into it. So first things first, let's talk about the pattern that's been going on the last few days with the NASDAQ 100 index. Now, the NASDAQ, which I know many of my audience members watch closely, even if you don't trade it, is a very big indicator of risk on or risk off sentiment in financial markets. Obviously, when people get really scared, they sell it like they have been recently, and when they're more optimistic, they buy it. Well, the last few days have been very interesting, where we've seen this pattern emerge, where we get good news or optimism in the morning, which causes a big spike to the upside, followed by skepticism and worry taking place in the market and causing a sell-off into the end of the day. Then, at the same time, the next day starts up and the Asian market starts to see good news, positive price action, and we shoot up higher. And then early New York session, we push through the highs, and then we proceed to collapse into the afternoon. Well, is today going to be another scenario like that, or are we going to buck the trend? Well, today we had some good data this morning. Unemployment claims came out better than expected, and the market took this as a signal to go ahead and get all bulled up again. But I gotta say, it is looking a little bit frothy out there, and to get overly bullish, I think, would be a mistake. I am bullish, don't get me wrong, but I do think that trying to jump the gun and say that, the bottom's in and this thing's going to fly from here is an aggressive statement. Again, I would love that to happen as I am long, but I just don't know that I'm fully confident in this bounce back just yet. That being said, let's talk a little bit about what we saw this morning. So here's a look at what came out on this morning's report. We saw the unemployment claims drop from the previous number around 249,000. This week we saw 233,000. The forecast was for 241,000. So as you can see, less people filed for unemployment in the latest data point. Now, let's break that dialogue down. Less people filed for unemployment, meaning jobs data, good. So keep it really simple. Today was a positive figure for the market because people have been very concerned about the economy and whether or not we're going to enter a recession. And so when you get signals like this, hey, things are okay on the labor stats, that's good, right? That's going to offset some of the worries, and this market is there's no shortage of worry in this stock market and in the global markets right now. We saw the big catalyst on Friday, the week's jobs data point, and so today's helps a little bit to counterbalance that volatility and that fear that's been baked in the market. That being said, again, the pattern of good news spiking the market in the morning but not being enough to hold the gains is something we've got to watch about. And there's a simple technical signal that I will be looking for personally that I discussed in today's live stream with my trading companion, Frank. I pointed out that we've got this level here, which is the previous spike intraday high for the NASDAQ, and we've got, of course, the Monday low during peak fear that came into the market. So in both scenarios, we saw really staunch rejection in a price action perspective. So let's zoom really close into price for a second. What we can see is, again, we've had this pattern where price came down to this level, rejected it very, very hard, and then since then has been ping-ponging around. So price shoots up to the upside, tries to make a breakout, tries to get bullish, and rejects. Then it rejects again, and now as we try and go at it for another time here, what I'm looking for on a price action signal perspective would be a closure above these levels. Could be today or maybe tomorrow, but that would give us some confirmation that we've actually overcome the road bump here that seems to be this 18,400 level for the NASDAQ. On the flip side, if we tank, if we continue the pattern and we see big selling coming into this market, what I'd be looking for on a bearish perspective, price action wise, would be a closure underneath this 17,300, 17,200 area in order to confirm that perhaps sellers are fully back in control. Between now and then, yes, this market is in a short-term downward trend on the daily chart, but I also really like the long-term weekly chart level that we're sitting at. So I lean bullish, but if I'm wrong, Again, those are the signals I'd be looking for. We'd be taking out the weekly low. If we take a look at some other data statistics overall, we can see that the labor market doesn't seem to be crashing, but it certainly has slowed. We can see that the NFP report here on last Friday was a big negative thing. We missed estimations with this red dot here, but we came out at 114, so we were lower than expected. ADP also missed estimations, came in low, and that's been a theme for the last 3 different reporting periods. Unemployment claims, as I mentioned, came in a little bit light, which is good, right? Light unemployment claims is a good thing. Job openings have been coming down, but stalled in recent weeks, which I would actually take as a positive. We're not seeing, job openings slowing further, but we will get the latest data point on that, in a bit. So we'll have to keep an eye on that. Unemployment rate has been trending up overall. I think what the market would love to see in the next round of data would be sideways movement on this, but if it does continue to trend higher, that will further press the Fed to really look to cut interest rates in September and perhaps in November and December. Anyways, wage growth also cooling. This has been helping the inflation story. And overall, I kind of lean into the idea that where the stock market is at, or where the economy is at, is not particularly threatening to certain markets that people are so scared about. I think that this fear event, in my personal view, is a buy the dip opportunity. And I've been very clear. I made a full video about this. Maybe we can link the one in the top right hand of the screen, Chandler, if you don't mind for us. This video that's popping up on the screen right now is a video that I made discussing my personal trading strategy, or my personal kind of financial strategy for how I'm treating a bigger bear market if it does form here. I personally actually love bear markets because it gives me a chance to buy stocks at cheaper prices, and I personally only deposit into my personal trading account. These are all personal because I keep using that word because this is not financial advice. This is what I do, right? I have cash on the sidelines for these times, and I invite the market to go lower because that gives me a chance to buy stocks that I like at lower prices. We can also discuss gold here, which may have left me in the dust here. I've been talking about this level 2360 as a possible area for setups on the long side, but I am definitely not chasing this, especially with so much to do right now. I have so many different, trading opportunities that I'm seeing right now. I've been very, very active, and I'm looking to, only take setups that look the best to me. And this gold setup at 2360 looks pretty good, but there's nothing for me to do up here. I think that, from here, you very well may have already found the bottom, and maybe I just missed this trade, in which case I'd look for breakouts and retests. I lean bullish on gold because of all the data that I just showed you. Economic data does seem to be cooling, and that leads to rate cuts. And if rate cuts come into the picture, that is ideally, weaker for fiat currencies as they start to, print more currency, get the flow of currency going. That makes the price of gold usually go up because the value of currency diminishes. So I like gold to the long side. I've been bullish on gold all year long. I have not wavered once on that. And I continue to be bullish from here, but I'd like to wait patiently to see if I can get a pullback. And if I don't, I'll look to trade the momentum if we get a breakout to the upside, but only longs for me on gold right now. In years past, I've been more bearish or bullish on gold, but lately this year, nothing but upside because I do think rate cuts are coming. And speaking of rate cuts, the 2-year yield dropped off really hard recently, showing signs that rate cuts are probably coming into the picture this year. In fact, now the market is thinking we'll get multiple rate cuts, where we were thinking maybe 1 or 2 a couple months ago. Now it seems like 3 or 4 is pretty expected by the financial markets, as we've started to see the economic data really start to cool. The Fed has a lot of ammunition to work with, by the way. They're working with 5.5% in the federal funds rate to cut in the event that they need to in order to stimulate the economy. That's another positive thing for me when it comes to buying this dip, is I think that the Fed has ammunition, for lack of a better term, to actually combat a slowing economy this time around. It's not like we're working with, Europe in the past where they've had low interest rates and then they enter into a recession. It's like they can't cut rates any further. The Fed has room to cut rates to stimulate the economy, to pump stimulus into it if they need to. And that is a nice backdrop in my view for equities. Also, silver's up 3% today. Oil is up, off of the lows. Oil holding here, I think, is actually a very good thing. I don't want to see oil scream higher because that could introduce inflation scares again. But oil, where it's at, I would say is pretty non-threatening. And if oil had continued to crash, that would signal that recession fears are really high. Why would that? Because let's break it down. Demand for oil is all about, the economy demanding oil, right? The world needs to be demanding oil for oil's demand to go up. How does the economy of the world demand it? It stays strong. So right now, I think that this stabilizing prices in oil is a positive thing. And speaking of stabilizing prices, let's discuss the Japanese yen, which seems to, for now, be stabilizing around the 145 to 148 zone. That's good news because, again, the yen stabilizing could mean that margin calls and further pressure on the Japanese yen to the upside, which is what caused all this recent volatility, in my opinion, seems to be on the sidelines for now. If something flares up again, markets could get freaked out. We could see, the yen get stronger and UJ and EJ and AJ, all those drop. But for right now, seems like the bottom is in for now. Again, I'm staying cautious with those words because I don't know for sure and nobody really does. But it does seem like to me, things lean like they might have found a bottom for now. So we'll see. Taking a look at the top setups algorithm, we'll go ahead and take out the neutral readings for a second. And this is what we're left with. We got some bullish readings on euro dollar, Dow, gold, euro CAD. TLT is something that I am actually watching for a deeper retracement. So I'm looking to maybe get back into my TLT trade, which is treasury bonds, USD JPY, CAD yen, USD CHF. These are some of your more bearish readings. A little bit of risk off favoritism when it comes to the currency trading side of things. So if you're a currency trader out there, Edgefinder is leaning a little bit more into, the safe haven currencies like JPY and, CHF, things like that. So I will be looking for pullbacks on those to maybe add a little bit of a hedge, even though I do think that, there's a chance that the, USD CHF has found a bottom. I don't hate the idea of maybe taking an attempt on the short side again, which has been one of my better trades this year, if we start to see, pullbacks up into these areas. Because just like the market can get overly bearish, like it was, I think, on Monday and Tuesday, the market can also get very, very optimistic too quickly. And perhaps there's something to be said for, just adding a bit of a hedge into my trading by getting long the CHF or JPY at appropriate levels. We'll see. I'm watching those. Those might be setups for me. Also, by the way, I did want to mention that if you're looking to join our Discord channel, you can see all of the different trades that we're taking. We currently have some discounts available as well as some information available. If you'd like to join the VIP Discord room, this is where I share all of my trades. I trade indices, I trade commodities, FX, stocks, and so does Frank and Ivan, who are two other traders within our group. So if you're not already in there and you'd like to get access to these trade signals being sent directly to your phone or to your desktop, you can sign up using the links down below in the description. Or if you have questions or you'd like to get extra discounts and details on that, click the very first link in the description right now to speak directly with a member of my team who can get you some information about these memberships. Bitcoin seems to be trying to bottom here off of this daily chart range. You can see we've been back and forth, and it, at least for now, seems like Bitcoin has found a bottom around 50,000. Perhaps 50,000 was the launch pad that the risk on trade needed, but we'll see where that goes from here. But Bitcoin, again, may be closer to a bottom than a top in my personal view. I do like Bitcoin for a possible buy in my personal, longer term holdings. I wouldn't mind having a little bit of Bitcoin. I'm not necessarily a crypto hodler, ultra super believer, but I think that the asymmetrical returns potential of Bitcoin is pretty good. Meaning, if I risk $1,000 on Bitcoin, this could go to zero, or it could go to 10,000 or 100,000. So I like the risk to reward simply by that. And I do see more and more use cases for crypto, both in my personal, experience as well as just in general. You can see it in the world. It's people use this stuff. So I do like it for the long term as a, kind of a high risk, high reward sort of position for me. So I am looking to maybe pick up some Bitcoin on the dip if we get any retests, or, I might add some allocation to it, especially if the stock market drops more. Ooh, baby. If we start getting some bigger drops, I will be going shopping. And I want to show you something kind of cool that I've played around with. You can do this on your trading view too if you'd like to, but I built this little Fibonacci retracement tool and I made a setting. So if I actually go to template and I go to market drawdown levels, I created this template, so you'd have to create your own. I made this, and we'll double click it just so you can see the settings. I added these levels. For me personally, as the stock market drops, I personally use those as times to actually deposit into my trading account and buy individual stocks that I like, or as I just mentioned, like maybe cryptocurrencies, things that I like for the longer term. I take these opportunities when the market is dropping harder to actually start adding and depositing to my personal trading and investing stuff. I keep a lot of cash on the sidelines for times like this. And that way, when they actually come, I'm actually very much looking forward to it. So if we see a bigger drop in the stock market, it's going to be a time for me to go ahead and actually start depositing and adding more balance to start buying things for the longer term that I like at what I believe to be better prices. Again, that's how I personally approach it. You do what you want. This is not financial advice ever on my channel, but just wanted to share that thought with you, as that is how I am personally prepping for potentially a bigger drop in the stock market. Now, I'm not necessarily a bear. I'm actually quite bullish. But if it happens, I'll take it as a positive thing, not as a negative thing. Let's keep going. Let's trade safe. Let's stay, positive about this stuff. When the markets are very volatile like this, it's very easy for people to lose their head and start doing silly things. Just stick to the plan. If you have a trading strategy that is, working for you over the longer term, you can't abandon things just because they start working differently. If you've had something that's worked in the last, 6 months, 12 months, there's a good chance that this recent time has been challenging for you, as it has been for me, right? Volatility changes dynamics of trading strategies, and no one should be shocked who is a veteran trader that sometimes spikes in volatility cause strategies that were working well to perform worse, or strategies that were working worse to start performing well. Volatility, nothing works all the time. This is trading 101. You've got to accept that everything has drawdowns, ups and downs, peaks and valleys, so on and so forth. Guys, trade safe. Thank you very much for watching my video. Have a great rest of your day. If you're looking for a better brokerage, then stick around for a second. I'm going to tell you how you can get some free sign-up perks with great brokerages all around the world. Whether you trade FX or indices, commodities, futures, all of the above, I'm going to show you a really cool way that you can get free sign-up perks with your new account. So if you're interested in switching into a different brokerage, you can get things like deposit bonuses or free stock shares, or you can even get access to some of our products for completely free. All you have to do to find out current perks being offered to new depositors is go to a1trading.com/brokers. That's a1trading.com/brokers. And as you look at that page, you'll see all these different offerings that we've currently locked down for you guys as subscribers, as viewers. Now, of course, we get something out of this. If you choose to use these links, you'll be supporting our page. But in return for the viewers, we've got great sign-up perks available for you guys so that you get some free game just by signing up for a brokerage if you're looking to do so. So check it out on our website. You can find current deals at a1trading.com/brokers. Thanks for watching this video, and on the screen right now you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.